All right, should be on full screen, a screen that is. If not, just let me know. But again, welcome to our meeting, summer meeting. Sorry for the delay in technical stuff, but just to review our meeting this afternoon, obviously it's a virtual networking session. I hope you enjoyed that. We'll give you a brief report on Maple, and then we'll have a very interesting panel discussion on getting your goods to, from, and within the Canadian market. Sorry. And then I'll talk a little bit about upcoming events you may want to share or join us in later in the year. Again, I hope you enjoyed the conference room. Any questions you have are welcome. Everybody is on mute, except for our speakers, not because we don't want to hear from you, it's because we're just trying to drown out any background noise that might interrupt our discussion today. So please, there's a question and answer box on the right side of your screen. Please enter any questions you might have during our discussion today, and we'll make sure we share those with our panelists and get you an answer. Lastly, we're recording today's session and today's presentations, and a copy will be made available to you in the follow-up Maple communication. So Maple's growing. First, Maple was founded in 2015, and our first event was held in Irvine, California that year. We're now a community of over 50 organizations and over 120 members working over 25 markets and in 25 sectors. I want to thank everybody here as a member already for your support over the first 7 years. And those of you that are not, we hope you consider joining Maple in the future. My name is John Costanzo. That's me without the beard and glasses. I need to upgrade obviously, my photo. I was fortunate to join Maple in June of 20 and help launch the New York chapter. I'm honored to be the executive director of Maple New York. And we've been growing in membership and engagement through regional economic development and cross-border discussions. The chapter, and I'm pleased to announce as well that we have a new chapter in Ontario, and we've held several events in Toronto over the years, virtually as well as in person. And Maple led a Southern California delegation to Toronto in 2017. Hopefully we can do that again soon. So we have a well-established base of members in the province of Ontario. And hopefully we'll get to meet them all in person, not too distant future. And we're thrilled to announce that Bernadine Pereira has joined us to lead the Maple chapter in Ontario. She has a great experience in the financial sector. She's currently with the Wealth Advisory Division of Raymond James Limited. She's based up in Toronto and very engaged in the community as well as in the business community. So Maple is growing to the point recently covered there. In 2015, we opened in Southern California. Vancouver programming began in 2017. We opened our New York chapter in 2020. British Columbia opened formally under Jason T, our director there. And now we have a chapter in Ontario. So thank you for all your support in that expansion. And we look forward to giving you news in the future about additional chapters we plan to open in the future. And I want to welcome some of our newest partners. So we have Stream Realty Partners joined us recently, a commercial real estate firm with 14 offices across the United States and $5.8 billion in annual real estate transactions. And Purist North America joined us recently. Mike Coates is CEO and CEO of Purist, and they're a permeable paving solution manufacturer for public and private sector applications based in southwestern Ontario. And I'm thrilled that Invest Alberta joined us through our New York chapter not too long ago. Alberta IAC was launched in 2019 to promote Alberta as an investment destination of choice to international investors and attract high-value, high-impact investments to Alberta. I'm thrilled that Jordan Speakman, who heads up their development here in the U.S., came to us and joined just recently, and we look forward to building good, solid trade with everybody's help between us and between the U.S., that is, and that province. And Roland DGA serves North and South America as sales and marketing distribution and service arm for Roland DG Corp. Hamamatsu, Japan, founded in '81. It's a worldwide leader in format inkjet printers for the sign, vehicle, wrap, and textile personalization markets and other related industry sectors. So I want to thank Roland for our most recent new membership in Maple. And we have several new executive members that joined us as well. Marco Mavila, Senior VP of Bank of Montreal in the West, based in Los Angeles. Mike Stoppe, founder and director of Pacer Air Freight in Mississauga. And Sapan Samzada, I hope I pronounced that correctly, for Sustainable Technology Solutions based in LA. So welcome aboard. And Maple is really now very broadly represented across 25, actually I think this says 24, but I believe it's now 25 sectors, industry sectors, you can see listed on the bottom, and in 25 markets throughout North America. So growing geographically as well. And if you haven't yet had an opportunity to visit it, I hope you go visit our Cross-Border Insights page. It provides a place to reside, several interviews and executive interviews, as well as articles that we've done in the past that provide insight on trade with Canada and other subjects like intellectual property. It's a resource to go to for any information you might want to gather on trading with Canada. And just as an example of some of the articles you see, we did an article in June with Martine Hebert, Delegate General of Quebec at the Quebec Government Office here in New York. We were delighted to connect with her to discuss the work of Quebec government in the New York area and the importance of New York's economic trade with Quebec. And in July, we had the honor of interviewing Pierre Clairaut, the chief economist with the Business Development Bank of Canada, I believe he's based in the LA market. And if you haven't seen that, please visit our website. It's excellent insights on trade. And we have, if you haven't had an opportunity yet to see them, conversation video series. These are discussions with executives from members to share with us insights in their business and how they see trade developing between the US and Canada. We recently had an interview with Daniel Silverman and Marie Jean of the Invest Quebec group, international group, and also John Griffin of Sterling Capital Partners, and my former colleague of Purolator, Paul Tessie, Senior Vice President of Purolator International, on the subject we're actually going to speak about today. And we also are proud to be partnering with Kenobi Martins on a series of IP, intellectual property issues that you should be familiar with or may wish to be familiar with, to help you deal with that important topic when trading between Canada and the United States and perhaps elsewhere in the world. And last but not least, we have a good, diverse DEI program with the help of many of our members, but also recently had an interesting interview with our executive director in Vancouver, British Columbia, on Asian Heritage Month, and Susan Lapierre, founder and CEO of Toronto-based Tealbook, on leveraging diversity in your employee base for the supply chain sector, which is very interesting as well, and I encourage you to take advantage of those discussions. So with that as a background, I just as quickly say Maple is growing both physically, membership-wise, content-wise. Great organization to be part of. We want to thank all our members for being part of this experience that we've created only 7 years ago today and is growing rapidly throughout North America. And with that, I'd like to welcome our panelists today and introduce you to them before I ask them to switch on their cameras and begin our discussion. First, we have John Mansolino of Challenger Motor Freight. John is the director of U.S. logistics at Challenger Motor Freight, based out in the LA area. A North American leader in the supply chain industry. I believe Challenger moves, and John will get into this, 700-800 line hauls a day between the US and Canada. John is responsible for leading Challenger's US business operations and the rapid revenue growth and expansion of Challenger's service line footprint across the US. Prior to joining Challenger, he held a strategic growth role at C.H. Robinson, one of the leading brokers in the market. Richard Blank of Pitney Bowes, Senior Director of Cross-Border Product at Pitney Bowes. Rich's entire career has been in the cross-border trade sector, including customs brokerage firms, freight forwarders, before pivoting to e-commerce. Rich joined Pitney Bowes through the acquisition of Border Free, a company that created an application to help facilitate the transfer of funds for purchasing goods within Canada and then expanding that to the world. At Border-Free, Rich held various positions across operations, including facility, transportation, and compliance operations. And he ultimately found his home in product development, focusing in on best-in-class delivery networks across the world. So hope you join me in a moment in welcoming Richard. And last but not least is Frank Cicchetti of Purolator International. He's the director of U.S. districts, overseeing all business growth and operations in Purolator International's 5 districts in the East, Central, Great Lakes, South, and out West. He's responsible for executing the corporate strategy across 30 U.S. branch locations, and he's a member of Purolator's International Executive Leadership Team. In his 25 years at the company, Frank also served as Mid-Atlantic branch manager, regional manager, regulatory manager, and air network manager. And I believe Frank has the honor of being like employee number 7 or something like that with Purolator here in the States. So gentlemen, I'd like to invite you all now, as I shut down my presentation, to join me for our meeting here today. I think I stopped sharing. Is that correct? Yeah. Can you hear me?
Yep. All clear.
We're good.
Hopefully my presentation isn't still up there. Okay. Well, great. Well, again, thank you, gentlemen, for joining us today. And I'm looking forward to a great session here with your help. And I'd like to begin with an old colleague, Mr. Cicchetti from Purolator. He's young, but a former colleague, I should have said. Purolator's, Frank, a leading Canadian small package and LTL delivery carrier with substantial operations in the U.S., as I just covered. What are some of the challenges you've seen for U.S. shippers fulfilling orders in the Canadian market since the beginning of this pandemic?
John, that's a big question. The past 2 years have been like nothing we've seen in this industry, me personally. But the pandemic was a bit of a snowball effect. It had a lot of unforeseen consequences. The first thing we all anticipated, for 2 weeks, orders stopped. But then e-commerce boomed and the market corrected. And then in Canada, at least, there was historic flooding in British Columbia. After that, the driver shortage came. And then when companies were worried about and very rightfully so, the health and safety of their people, vaccination policies further tightened the workforce. Lastly, there was a great product shortage, especially in computer chips, which impacted almost every product that computer chips go into. So what this did really, John, is it forced companies like Purolator to really look at their business continuity plans and make sure that regardless of the disruption that we're talking about, that we're prepared and had continuity of business to meet the market demands. I would say that was the maybe biggest unforeseen consequence, but how we've came out of the pandemic and all these other disruptions stronger.
That's terrific. So you took advantage of a tough situation to build new capability, competency. That's excellent. So along the same lines, Richard, if I could move to you, Pitney Bowes is one of the largest 3PLs in the United States and other parts of the world now, offering global and domestic U.S. fulfillment, transportation services. And I think you had a big announcement today, if I'm not mistaken, as well, on Canada, which I believe is already a large part of your business. So how is that evolving? And maybe you can fill us in a bit on that announcement.
Yeah, for sure. Thanks, John. Yeah, it's very rare that the press releases are lined up for the operations and logistics folks here. So yeah, it worked out very well today. But yeah, hot off on the newswire, Pitney Bowes had a large announcement today about our Canadian services, if you would. So, just to take a step back and from a Pitney Bowes perspective, Canada is an equally large market for our global e-commerce team as it was US. Many people know Pitney Bowes through the legacy that we have through our legacy business within mailing and such within the US. But we are equally as focused in the Canadian market as we are in the United States. And for the last 5 years, what we've been focused on is two-way trade between Canada and the US. We have a lot of volume for our US retailers going into the Canadian market. We spent the last 5 years building out a novel multi-carrier solution in Canada, which allows us to have speed and reliability at a competitive cost. And So what we've been working on is, we just look at, the U.S. delivery network and our Canadian delivery network as two highways. And from a product perspective, we're just building on-ramps and off-ramps for that. So whether it be, the Canada to U.S. services that we just launched today, which may, it's focused on delivery for Canadian fulfillment freight coming into the United States, leveraging Section 321, which is what we've seen a lot of our providers do. It gives a Canadian induction point to leverage our core competencies of U.S. delivery. So it's just an on-ramp for that. You could build returns and other pieces off of it, which you'll see rolling out through the rest of the year. But then, as we also mentioned, U.S. to Canada is our largest cross-border market, and we built a pretty novel solution out in Canada, working with many partners. For that, we also want to make that accessible to the Canadian market. What we've seen is our speed and reliability resonates well within the market, as well as our pricing. So, another on-ramp for our Canadian delivery network is Canada Domestic Services. We look at it all in the same, it's just a parcel entering our network, going through our zone skips, our sorts, and handing off to our network of final mile providers.
That's excellent. So yeah, it's a big part of your business. And I believe Pitney Bowes is headquartered still here in the New York area?
Stamford, Connecticut. Yeah.
That's great. Okay, turning to you, John. On the same line, Challenger is one of the largest cross-border truckload carriers in the industry, and now you lead a logistics arm here in the United States across the country with offices in LA and Chicago and other parts of the country. What segments are you seeing the most growth between the U.S. and Canada in your business?
Yeah, no, great question. Yeah, thanks, John, and to Maple first and foremost for including Challenger and myself in this discussion. We're happy to be a part of it. Like Frank was getting to, right? The last couple of years have seen something that a lot of people and companies haven't experienced. The segments that we saw and are seeing tremendous growth are really in the durable goods sector because people were forced to stay home. So, what did that equate to, right? The work that we do in electronics was, had strong demand. We didn't see the traditional highs and lows that we see in those segments. Housing, building products, most people were stuck at home. So what did that mean? People were remodeling backyards, building home offices. So that has stayed extremely strong. Like Frank alluded to, e-com, which is a big part of everyone's business model, is seeing tremendous amounts of growth. So, that continues to be strong. When we look at where we're at now, present day and forward facing, once things open back up, we're still seeing strong demand across durable goods, but people wanted to also experience bars, restaurants. They wanted to go out. So you saw a bit of softening there from a consumer side, just because funds are being reallocated to live experiences, right? But the demand is still staying strong. It's just become a bit more balanced. Something that's all over the news now, especially, and a hot topic is also inflation. So as we're forward facing, inflation now, is causing consumers to pick and choose a bit more where they're spending their money. So those goods and services, and if you break it out too across multiple sectors, the companies, I think, that are going to continue to thrive even in an inflationary environment are value-based companies, companies that offer, a higher tier service or something additional. So we're seeing strong demand across those sectors. And then lastly, if you look at just overall production numbers are still high. They're expected to remain high through the end of this year. If consumer demand pulls back maybe a bit further, then potentially next year we'll see production levels, take a little bit of a decline. But right now things are a bit balanced, but demand across those sectors is strong.
Yeah, it's a great point. And I think it's been so long since we had a really full-fledged recession. I think there'll probably be initial shock over that, but it's a natural part of the economic cycle, and it probably is coming at some point soon, right? So
I agree.
yeah, we'll see. Let's go back to you, Frank. You've been in the business, as I mentioned earlier, 25 years, and I think even before that, you were with another trucking firm, if I remember. You've seen you've seen people entering the Canadian market in a good way and maybe not so good way. If you had to pinpoint maybe the 2 or 3 principal elements to consider if a company's thinking about entering the Canadian market or to begin exporting to Canada, what would they be?
John, I think I get maybe a 3-step plan where think about your unique selling proposition, whatever your company is. Why does your product or services resonate within the Canadian market? And then build a strategy around that. And then the next step would be to assign a cross-functional team. When looking at exporting programs, it's bigger than just shipping. It's the alignment of all those functional departments, whether it be finance, marketing, sales, certainly logistics, compliance, all of those. That feedback is necessary to form alignment of that strategy. And then lastly would be finding the right partners to help you achieve those goals, and look for enterprising partners, somebody that will share in the rewards and risk of the outcome of that strategy. But I would say that's about it, John. It's not for the faint of heart. You can't dip your toe into an international business strategy. And I would say the companies that are most successful take it very seriously and assign the right resources.
Yeah, it's a great point on alignment. That word is an important one. And a lot of times companies look at Canada as the 51st state, which we all know it's not, obviously, right? And they think that by just replicating what they're doing here to serve their customers in Canada will serve it well. And it's not always the case. So I think getting everybody's input is really important, as you point out. It's a great point.
Said.
Yeah. So Richard, going back to you, what trends are you seeing in your business? For instance, how challenging has it been to find delivery capacity, for example, particularly for your e-commerce customers during the pandemic and since it's modulated a bit?
For sure. So, first bit I'll definitely talk about delivery capacity in those parts and talk about it from 2 perspectives. One of what's happened over the past 24 months and what's happening right now, which are 2 very different things. But also feeding off of, Frank's earlier point there. On Pitney, we advertise our services as, design cross-border and such. And it's a key point that Frank mentioned about it being, all enterprise solutions, which is, if you look for the out-of-box logistics solution that's cross-border, even as going to a friendly country like Canada, the service is all about the shipper, right? But in e-commerce, it's really all about the consumer. So it doesn't take into account the consumer experience in that country. What are they expecting, the time, and also the cost burden that it takes. So, just underlining Frank's point of, the importance of getting, an enterprise level partner with you that's, invested in it with you, and it's going to give you a, kind of a design solution, because it's not one shoe fits all. You got to think about everybody. Where's the customer? What is the customer like? And, what are they expecting in their transaction? So yeah, we're very focused on that, and reliability is without a doubt, the number one thing. You deliver a parcel on time, you're never going to get a phone call to say thank you. You deliver a parcel late, you're going to get a phone call, 9.5 out of 10 times saying, what happened? Where is it? Something went wrong. So capacity, delivery capacity, final mile capacity is certainly a big struggle. To my earlier point of breaking the question up into what's happened in the past 2 years and what's happening now, with the Canada-specific lens on it, I always think that, Canada is probably the furthest ahead in final mile delivery of all the markets that we operate in, U.S. inclusive. There's a lot of crowdsourced carriers that are already there. There's a lot of carriers that have, dedicated fleets that they're repurposing for e-commerce, so they're actually able to bring assets in. So, if you're out there and you're working with the carriers, there's a lot of solutions there. There's a lot of companies that are willing to take the volume and want to take the volume, quite frankly. The biggest part here, and we have a friendly panel with Purolator and Challenger, who certainly have helped us out during the COVID times of finding delivery capacity, is you just got to find reliable capacity. with crowdsourced carriers coming on and all of it, it's great because there's a lot of different options. You're going to get pricing, speeds in different markets, but you need to make sure that they can handle, a large chunk of your volume. What could be, substantial to some of these smaller up and coming guys may not be big enough to make, the dips in the pools for some of these large shippers. So, finding the reliable ones that are going to, actually offer something new to the table, whether they be asset based or just have some type of differentiator, is probably most important, because you don't want to make a switch and then have it fail just as much. So you really have to find a way to work quickly, but to vet out all the different solutions in market. And that's probably been the biggest area of focus for us. Looking at it now and in 2022, I think the grass is a lot greener in Canada. I think, from, the COVID impacts, whether it be, volume peaks that have dipped back down, and then also capacity. I would say that of all of our cross-border markets, Canada is probably most level set. The peaks of the volumes have come and are kind of our new operating norms. And the transportation providers that we're coming out with, we've had a success in vetting the new ones, and we're working with the ones that we, that have helped us out a lot throughout the COVID months.
That's excellent. Thank you for that insight. Thank you.
Yep.
So, John, coming back to you, Challenger is not recently, within the last several years, has invested heavily in refrigerated temperature control fleet, in particular moving high value pharmaceutical product for big companies like Pfizer, Lilly, and many other pharma companies in North America. So what challenges has that sector experienced? And maybe you can just tell us a little bit about what you've learned from that business, and then what you can share with us here. If you can share with us, that is, some of your knowledge in that sector.
Yeah, absolutely. We have, like you alluded to, we continually, whether it's on the pharmaceutical side of the business and other areas of the business, continue to invest heavily in our fleet, in our technology, and then also our people to execute on the business. So pharmaceutical high value business specifically, when you look at some of the challenges, whether it be the last couple of years during COVID, as Rich said, also segmenting some challenges that will always be there in certain segments of the business. What are the top priorities for high value business, right? It's going to be service. So there's a very high expectation on service, a high expectation to ensure partners that you're aligning with have a very low failure rate on that business. The need for new equipment, obviously, without getting into the details of it, the new equipment then leads to the ability to maintain the product, and then manage costs, because it's a high value oriented segment line, right? So, for us, we and it's kind of a nice segue from what Rich was just talking about, right? Some of the things that we've learned along the way, but I would almost say just company-wise as our strategy, we lean into difficult business. So those are the partnerships throughout the years that we go out and seek. We want to be involved in, high expectation business, because we look at ourselves as doing a bit more than just, getting a truck from A to B at a low cost option, right? So, these business lines, whether it be pharmaceuticals, we've been in the automotive space for a number of years, just in time business, high value electronics, as I was just talking about, going through some of the segments that we're succeeding in, working with the other panelists here in their companies, right? One of the things that I think Rich had a good segue with that, why we continue to make the investment in that fleet and also across our company is to be able to be an extension of a company, right? As their transportation provider, and deliver high value and service. And it's something that we're going to continue to lean into as we move forward. So for us, it's a great place to be, across both our asset and our brokerage divisions. And, I think Rich was talking on this side of, from a customer's perspective, we're always faced with, questions around, there's all these transportation companies out there. Who do I partner with? You might have lower cost options. You might have more expensive options. And I think what we've seen the last few years in particular is what the pandemic's taught companies is they really have to evaluate and choose their partner aside from just one metric, right? So in that service line, the companies that are really thriving through the pandemic, and then as you alluded to, there's a lot of things are always going sideways, right? So it's who can manage through that and work through those issues, because there's always going to be issues, in the future. I think companies, especially in the high value space and high service requirements, have really reevaluated who they're partnering with, and we, along with the other companies here that are participating, have really leaned into being a value-oriented provider and have been able to use our network for capacity. So I think that's probably the big takeaway through all of this is companies are choosing very closely who can get their goods to ultimately the consumer. And those are the companies that have been able to continue growing and will continue to be successful too.
Yeah, it's funny. Those are great points, John. And one of the things I've become very familiar with over the last year or so is the amount of technology that has to be deployed in handling high value pharmaceutical, right? You're not only tracking a shipment, right? Where is it going from point A to point B, or when did it get delivered and who signed for it? You're tracking every hour where that truck is, what the temperature reading is on the truck, right? Because a fluctuation of 2 degrees could destroy a multi-million-dollar truckload of drugs. So I think those kinds of investments are going to continue, and I don't see pharmaceuticals going backwards in the next few years anyway. So
No, that's
yeah, I think there's opportunities for technology companies in the sector as well, I think, to help enhance that overall product. Thank you for that. So Frank, coming back to you, Purolator's part, I don't know if a lot of people know this, but Purolator is a operating company of the Canada Post group of companies. And, there are a few other companies that are part of these postal organizations, but Canada Post was the first one, I think, many years ago, back in the 90s, that actually made that leap and acquired Purolator in 1993. And they had a lot of time to develop unique services and characteristics around that relationship. Can you share with us some of the things that have come out of that acquisition?
Sure. I would say probably our biggest product development would be our PuroPost product, which really is a hybrid of the best of both worlds between Canada Post and Purolator. Going back to what Rich mentioned, it all comes down to customer needs and then solutioning around those needs. And we created this product in conjunction. We engineered it with the client's needs in mind. So we know that there's one postal agency in Canada, Canada Post, and our network is designed for speed entering into the Canada Post network. We even have a hybrid program that makes it easy for our customers to choose between what network's the best. The Purolator Freight, Purolator, Canada Post. We'll make it easy, and we'll kind of shop our own network based on capabilities and service requirements to give the customers, the consumer, what they need. Because if anything, we know that e-commerce, customers want the price point that fits. However, they also want service. Amazon has created this environment where service is more and more important, where we've introduced something where same-day delivery service is now, very common. So we had to understand that model to build this PuroPost product.
Yeah, it's just interesting. You reminded me that, if I'm not mistaken, like 75% of Canadians receive their parcels through a parcel locker in their neighborhood, right? They go down the corner, sometimes right in front of their home, and get their parcels through that from Canada Post. Canada Post is the only one that has access to those. Maybe it's even 80% now, but if I'm not mistaken, is Canada Post through this, and Purolator created this delivered to retail as well recently, right? You can pick up your packages locally at a local post. Just a little bit about that.
Right. Well, delivering to retail kind of has a couple different flavors where it's all about that omni-channel approach, John, where a lot of our customers want foot traffic into the stores. So we'll say they'll want the product to deliver to a retail outlet, and then a consumer goes in there and hopefully, picks up some other items. So that's one deliver to store. And then there's the deliver to a retail outlet, both at either a Purolator retail outlet or a Canada Post retail outlet. The idea is convenience for the consumer, where that person on their way home, they might be passing a Purolator or Canada Post retail outlet and pick that up. That especially around Christmas time or the holidays, that becomes very popular. Where if I don't want my children coming to the front stoop of the house and finding their Christmas presents there. It's not the same that my kids are about 17, 18 years old, but they when they were a little younger, you wanted to keep the surprise alive. So again, it's built around the customer needs of what that market is looking for and how to make it the best possible. I'm going to piggyback on Rich, customer experience that we can offer.
That's terrific. Thank you for that. Appreciate it. So, Richard, going back to you, over the past several years, U.S. shippers have opted to fulfill their Canadian orders from their U.S. inventory. It's been a pretty big trend. Some of the benefits of doing so appear to be, better order fill rates, right? The ability to have product handy for somebody in a major DC rather than having multiple DCs. But what have you seen in that regard, and what are the trends you see in the future for inventory?
For sure. So the trends for the future, I'll start backwards. I don't think anybody has the answer. We're going to keep seeing it jump around from side to side. I think as recessions happen, not just in the United States, but it's going to trigger it off globally. You're going to have new trade, right? We're 2 years out from an election year, so I'm sure there's going to be more changes here as well on what our the trade agreements are between Mexico, United States, and Canada. So I think there's this evolving landscape and just this importance of having, like I said, there's no one size fits all. You have to have an option for all solutions or for all needs, and then just be ready to be accessible and ready to be plugged in there. I think, right now, to your point, yes, there's a lot of people that are doing U.S. fulfillment still to go into Canada just so that all their inventory is housed under one roof. But on the contrary, there's also a lot of shippers that are leveraging Section 321 and having all their freight from China or wherever else it may be coming from overseas come into distribution center in Canada and actually just access the United States from there using 321 because there's duty benefits, especially as the trade wars go on between U.S. and China, as the ports in the U.S. become even further backed up. There's a lot of good rationale to why you would actually put your freight in Canada. I do think, though, that one catalyst that we have, the freight will always be going back and forth from being stored in U.S. and Canada or Canada to U.S. and whatever it may be. But where there was pre-COVID, there was a lot of push, and we saw a lot of our customers who used us, our clients who used us for cross-border shipping, is they would use our services, figure out which markets worked well, and then go into there and offer the same type of U.S. presence that they do in the international market. So meaning a lot of it fueled by brick and mortar and such. As you've seen in the Canadian market with some retailers, the brick and mortar, it's failed. They didn't have the right inventory in country. They couldn't get the replenishments in as fast. You had empty racks and ultimately a poor customer experience. So what I think is a value add to us in the e-commerce and the shipping space is that, I don't think there's as much of a drive to do the brick and mortar, deployment of brands and products, but there's a lot more for direct to consumer. They're going to forward deploy inventory and have operations working within the country. So I think you'll see a lot of that. You'll see, just large shippers, 3PLs, and large retailers just kind of continuously moving around freight and trying different things out as the labor markets and trade agreements change country to country.
Yeah, I think it's a great point, and I think you raised it earlier as well. The consumer is going to drive what we do, right, or what companies do, and keeping in tune with the consumer expectations is probably the smart way to go on that, rather than looking only at the balance sheet. What's the most cost-effective way of serving? So I couldn't agree more that. And one of the things I always marvel at is I can't tell you the number of times I've received, and I'm sure you guys maybe have stories about this. I've received a phone call from a shipper complaining about a shopping cart experience, right? Which obviously most of us, although Rich can say his company probably does more of that than typical transportation company. But we didn't build a shopping cart, but they're complaining about a problem with the shopping cart. They don't distinguish between the seller of the goods and the logistics company as much as they did even 5 years ago.
They just want to choke to squeeze neck.
That's right. That's right. But I think the companies that can solve those problems and with technology and those solutions are the ones that are going to win by following customer expectations. So it's going back to you, John. You lead Challengers Logistics, U.S. logistics company, a third-party broker here in the United States, both domestic and cross-border freight services offered by your organization. The brokerage sector is very fast growing these days, and it's expected or forecast to continue as one of the fastest growing sectors in logistics. Why is that? And how is Challenger Logistics positioned to take advantage of that?
Oh, yeah, great question. When you look at just overall, our brokerage has been growing in tandem alongside our assets at a very quick pace and a healthy pace. Overall, the traditional model, always had the two separated, right? So it was customers were having to make the decision to say, okay, we have a team managing our brokers on this side, and we have our regions that are handled by asset-based companies on this side. And I've always had a long time joke, right? You ask an asset-based company, they'll tell you all the reasons they're a lot better than a broker. You could hang up the phone there and talk to a broker, and then vice versa, right? For us, we have a pretty unique value prop when it comes to what we can offer just the industry and our customers. When you start breaking down the most important metrics that customer is going to make their decision based on who they partner with. Last numbers that we looked at, there's roughly 25, 30 companies that have been in business as long as Challenger, have the size of our assets and the size of our brokerage department. So, out of a whole host of different options out there, to be able to offer really a unique value prop to the market is really just serving us well, but ultimately serving our customers really well, because what they're able to do is we're able to give one point of contact as Challenger to our customers. And then as we evaluate their lanes and their supply chain and regions, we're truly offering them an unbiased, just objective viewpoint on how we feel it's best to manage certain segments of their business, because we don't have a stake. Like I go back to my joke there, right? We're not trying to push just our assets, and we're not trying to push just our brokers. So for us, it's worked out extremely well, and our customers have been the biggest winners out of it. I think it's a trend that's going to continue in our industry. Transparency is definitely here to stay. Solution-based, value-oriented. I mean, that's probably been one of the big themes as I listen to the other speakers and you, John, come out of this. So for us, I think, certain regions bode well for partner carriers that are based in those regions, and other regions bode well for an asset network. And just, speaking on Challenger's behalf, knowing the business and what we're doing, that growth is here to stay. It's something that we're leaning into as one company, and ultimately it's a demand and it's a problem that we're solving for our customers.
Yeah, it's terrific. Yeah, I noticed that there's a lot of investment going on in the brokerage sector in technology, the ability to book a shipment, to get a quote, to track a shipment, to have visibility into what's happening with that shipment. I think that's going to continue to drive that sector, I think, because there's quite a bit of money pouring into that. So it's I think, a strong sector for everybody in the future. So thank you for that. And coming back to you, Mr. Giacchetti, depending on the segment, return shipments could represent zero, right? A shipment coming back to you because it was refused, for example, or non-deliverable, rate as low as 0 to as high as 20, even 25% for some e-commerce companies. How should a ship, this is often a problem, as you know, for shippers, that they realize they're crossing a border twice, if that's the case, on a return. So what advice do you have for shippers or companies entering the Canadian market when it comes to returns?
Well, again, leaning on the responsive of the two other panelists here, who are disciples of customer experience. It's all about the customer and making it easy to return that product. I think back to when the logistics field was a cost center, but then Walmart and Amazon and a host of other companies start leveraging that proficiency and really became a strategic advantage. Returns is no different, because if you're not good at returns, no matter what your customer experience is, that poor experience becomes your de facto experience. So it's really important to excel in all pieces of your supply chain, including reverse logistics. So, to sum it up, John, I would say serving the customer at the speed, the cost, and capabilities that they want is important. And for a Canadian provider, I'd say having an in-country returns experience is the game changer to service the Canadian market, to give that look and feel for a Canadian business doing business in Canada. That'd be really important for any international company looking to service the Canadian market.
Yeah, I couldn't agree more. And I don't know about you, but when we bring something back, we want to make that as easy as possible. I just returned something the other day. It took me a couple of days to figure out how to do it, and I probably won't be ordering from that company any longer. So yeah, I couldn't agree more. Customer experience is everything. Thank you. So Richard, coming back to you, how do you see Pitney Bowes evolving as a company in the next couple of years? What are some of the areas of focus or initiatives for Pitney Bowes?
Yeah, I think you'll see a lot more focus on just, key transportation lanes. And, we look at it and moving a parcel of whether it goes from point A to B or B to A. Pitney is there to, help facilitate that transportation. So, both looking at it as like, Frank was saying, forward parcels, returns, it's kind of like nobody wants to touch them, but everybody needs to do them and do them well. And the way that I want to look at it, and the way that we look at it from a Pitney Bowes perspective is it's just transportation, right? Maybe you want me to peek inside the box and one of the countries to let you know it's there, but we do that all the way through when we forward ship. So like I said, it's all about the bidirectional trade lanes, getting more on-ramps and off-ramps to the highway. You'll just see us doing that in more markets and being there. But like I said before, Pitney's whole perspective on it all is we want the brands to be forward and own the relationship with the consumers, and we want to empower them. So you'll see us providing these transportation lanes, but we're going to do everything in the shadows, mainly because we want it to be consumer focused and brand focused as opposed to making it about us and being a transportation or a delivery carrier.
So make your customers look good and you'll win in the process.
Exactly.
Right.
Well, that's the hope, at least, right?
Yeah, that's a good strategy. So next, coming back, John, to you. You're in a unique spot there in Southern California. You have a good perspective on the port issues that we've been all wrestling with over the last couple of years. And just recently, I read that 50,000 independent contractors are going to be forced to become employees of their transportation or logistics companies due to California legislation that was just passed. How do you see that impacting Challenger's business and not just your business, but everybody's business? And do you see that as more challenging for the ports than we've already had?
Yeah, so, I'm sitting in our Long Beach office right now. We're basically at the base of the ports. My drive into work every day goes right over the ports. So I do have a good perspective on Long Beach here. We've had to deal with in the short term, it's kind of broken down into two, right? Short term, and then what's going to be the implications long term. In the short term, we have had slight disruption around some of the protests that are going on at various ports in California. Nothing that we weren't able to work through on behalf of our customers. What we're going to see in the short term, they just actually responded to some of the appeal requests. And it was basically, you got companies have had a couple of years to prepare for this. So it does look like it is going to stick because that's always part of the conversation. Will it be appealed? So it does look like it's going to stick. And ultimately, in the short term, we're going to have rising costs for a lot of carriers. You're going to have a percentage of capacity that's going to exit the market. So, they're no longer going to want to take an outbound California load. And ultimately, that's going to push up, prices, right? Because it's going to play with the imbalance of supply and demand. Throw into the mix something that not a lot are talking about is also the unions are in their contract negotiation year with the port workers. Traditionally, what we've seen is during those negotiations, you know, a little bit imbalanced as well. So, you know, there's some factors there in the short term that just lead to rising costs and a bit of capacity out of the network. You know, as we look at the total theme, though, you know, for us, we're well positioned as a company for our customers to where these are things that are going to impact, in my opinion, a lot of the smaller new entrants into the industry. This is happening at the port side. It's also happening when you look at the truckload side across North America. The last few years have had quite a few small new entrants into the business. You know, now that costs are up and demand has come down a little bit and rates are down, there's a lot of companies that just can't handle, you know, some of the increases in costs. So it's so important, and our customers are seeing that, having conversations with companies that are really scalable and can work through some of these issues, especially when it comes to capacity and just the cost of doing business in well-run companies, right? So we're lucky as Challenger to be in a good position to work through it. Long term, you know, it comes down to probabilities. Will other states adopt the same ruling? Will there be a federal mandate? You know, none of us can predict that right now. But if that does happen, then there's probably a high probability of some disruption to the overall labor market for our industry. So some of that will be, you know, to be seen, right? But
well, let's let it be said, it's never a dull moment in the transportation and logistics sector. Right? Well, I want to say, before I wrap up here today, I want to say thank you guys. You know, I wish we had more time. There's so much more we could talk about, but I think you provided some excellent insights today into some of the pitfalls and opportunities in trading with Canada and exporting, importing from or between our two countries. So thank you for all your time today and insights. We really appreciate your sharing this time with us.
Thanks for hosting us, John.
Thank you, John.
Thank you. So if I can now, I'm going to just quickly wrap up here, and hopefully you can see this. Can anybody let me know if it's coming across? Hopefully it is. Let me just make sure. I'll hit share one more time to be sure.
We don't see the PowerPoint yet.
Okay, thank you for that, Stephen. Can you see it now? Yeah, it says I'm sharing, so I think we're good. So I just need to get to the back of this. I apologize. So as I mentioned earlier today, you know, there's a few events coming up that I wanted to make you aware of. One is on September 8th, we have a meeting in Toronto introducing our new chapter. We have that planned at the Toronto headquarters of the Business Development Bank of Canada. Presenters will be Paula Cruikshank, Senior VP of Ontario and Digital Transformation for Business Development Bank of Canada, and Alex Rodov, founding and managing partner of QA Consultants. So I hope you'll be sure to join us for that event. It should be a very, very interesting one. And then other chapter events, we have a September 14th chapter meeting in Southern California. That's our fall reception. And then following that in British Columbia on October 4th, we have the fall reception in BC. And we'll have one probably late November here in New York as well, which I didn't have a slide on, but that's our thinking at the moment. So with that, I want to thank you. Thank you for joining, for being members of Maple. And if you're not already a member of Maple, we hope you'll consider joining us. And you can find out more about us by either emailing myself or going on our website and inquiring about membership through that site. Thank you again, and everybody have a wonderful afternoon.